Hi guys, Reynaldo here and welcome to today's free workshop titled The Ultimate Trading Course for Beginners. My email address is esttraders@gmail.com. So if you have any questions or queries regarding this course at the end, please feel free to email me. Once again, I would like to thank you for coming in. And before we begin, as per normal, I'm going to dictate in regards to the disclaimer. Notice that trading may not be suitable for all investors. The high degree of leverage with foreign exchange, options, futures, and day trading stocks can work against you as well as for you. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment. Therefore, you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Past performance is not necessarily indicative of future results. There have been no promises, guarantees, or warranties suggest that any trading will result in a profit or will not result in a loss. The content of this program was created and is owned in its entirety by Enlightened Secretary Education. Any reproduction, copying, duplication, and distribution of this program's content without the expresses written consent of Enlightened Secretary Education is strictly prohibited. Okay, so what's the agenda for today? The agenda is that we're going to discuss different types of asset classes, different market types, why learn trading, what is trading, the benefits of trading, the myths and facts of trading, major concerns, learning to trade, knowing the trading game, how to get started, and last but not the least, where to from here. All right, so if you have any questions, please feel free to email me at esttraders@gmail.com. So let's begin. So why are people getting wealthier in terms of financially? Right? It's because in regards to these different type of asset classes. So with asset classes, you have cash, you have stocks, you have bonds, you have commodities, and you have real estate. I'm not a financial advisor. I'm not here to give you any form of advice. However, in regards to people who are wealthy, they will have different asset class in regards to their investments. They will have cash. They will invest in stocks. They will invest in bonds. They will invest in commodities. They will also invest in real estate. So anything that was currently what's happening right at this point in time, based on the coronavirus, that led the market to almost its crash run down to 30%. So if you have a portfolio and that you are not hedged, for example, you'll get affected regardless whether you have a 401k or you have a mutual fund. So if you look in terms of your statements, you'll basically be down the same as what the market is here in the US and based on the S&P. So not unless you have protected your portfolio by, say, purchasing bonds or purchasing commodities, also purchasing the US dollar, then you would have at least minimized your risk. So, but if you have also real estate and you're paying for mortgages, of course, that will be affected. Unemployment rate actually increased from 285,000 last month, March 19, I believe. And then after the coronavirus hit in regards to pandemic and everything closed, unemployment raised to 3.3. Last week, it rose to 6.6 million in regards to unemployment. So in my opinion, I believe it's not over yet. This is just simply a beginning. Because if we look through a chart through here, this is the S&P 500. This is basically the start of the pandemic, actually already in February, and then March through there. Currently it's just correcting itself. So I believe it's not over. If I go through a bigger time frame, and mind you, this is a totally different event compared to 2008, right? 2007, 2008 was based on the financial markets, based on mortgage backs, and now it is based on not in the financial markets. However, it's based on something that we don't see, which is a virus. So where to basically from here, in my opinion, there's more room for it to retest, to drop to a certain point, to a certain price point. But of course, the market cannot just crash, or it'll just um, can it just drop, I beg your pardon, can it just drop out of nowhere? It has to correct itself. And once that correction is basically happened, you'll see a continuation of the price to the downside. All right, so that's simply put. Alrighty, so let's discuss about the financial market. What is the financial market? Well, this refers to a marketplace where financial assets are being created and traded, such as stocks, futures, currencies, options. So these four major asset classes in terms of the financial markets are the ones that are being traded. So the financial market provides a platform to the buyers and sellers to meet for trading assets at a price determined by the demand and supply forces. There's also different type of market types. Let's discuss about the stock market, for example. This is known as secondary market, which is an organized marketplace where securities are traded between traders and investors, such as individuals, also known as retailers, institutions, which are your professionals, stockbrokers, and fund managers. The futures market is simply the delivery of or settlement of commodities takes place at a future specified date. The money market is a market where monetary assets such as commercial paper, certificate of deposits, treasury bills, etc., which mature within a year are traded is called money market. A market for short-term funds that is traded over a virtual network. The foreign exchange market, a market where buyers and sellers are involved in the sale and purchase of foreign currencies. And last but not the least, the options market, which is an option is simply a contract that allows you but doesn't require you, which is the investor, to buy or sell an underlying instrument like a security, ETF, or even index at a predetermined price over a certain period of time. Buying and selling option is done on the options market, which trades contracts based on securities, whereas buying an option that allows you to sell shares at a later time is called a put option. Sorry, buying an option that allows you to buy shares at a later time is called a call option, whereas buying an option that allows you to sell shares at a later time is called a put option. So I'm not going to go through all of this today because that will be a different topic, a different workshop. But however, I'm just introducing it to you as an introductory on different market types. And I'm also going to explain to you later on out of these market types which one is better suited for a beginner. So why learn? That's a question. So if most investments are in the financial markets, then is it important to know what's happening with your money? In my opinion, I believe it is really, really important for you to manage your own money rather than letting others manage your own. And the reason being I say this is because if you see fit here on this chart, 2007, 2008, notice it happened here within the year, and it happened here within 2 months. So in regards to its volatility, for it dropping more than 30% is huge. Here, it happened basically in a year, and then it corrected itself and continued to create the longest bull market basically in history. So if I go through, because normally it takes on average around 3 to 4 years for it to go to the upside and will correct. But if you leave through here, 2009 till 2020, that's 11 years of it going up. So that being said, around this period, I was also teaching. I've seen people lose on average between $1.5 to $2 million overnight, especially when Lehman Brothers went bankrupt. Here, on the other hand, I know a couple of people who lost hundreds of thousands, $500,000 to $1 million, basically in a span of about a week when the market basically were tanking. So it is something that if you're an employee or you're an investor or you have money somewhere being managed by someone, I believe it's also important for you to know what's happening in the financial market, so at least you would know what to do to give instructions of the people who are actually managing your money. That's my personal opinion. So if you are knowledgeable and you know in terms of the different asset classes, at least you would be able to dictate which one you'll be taking out, or which areas in terms of where you'll be moving your money around to hedge your positions, to minimize basically the risk. It's about risk minimization. Okay, and trading at the same time gives you the ability to not just knowing, but also give you the ability to make an extra baseline income. So what is trading? Let's discuss what trading is. I went to a workshop, one of my first actually seminars, more than 24 years ago. And my teacher basically said during that time, it was a really good definition. And it simply went in there, and I'll never forget. He stated that trading is a transference of wealth between the idiot and the well-informed. I started laughing. At the beginning, he said, "Really?" And then when you really think about it, it's so true, because trading is a zero-sum game. Investing is a zero-sum game. One will win, one will lose. So either you're on the winning side or you'll be in the losing side. So if you're in a winning side, then that means that you know something, unless it's just pure luck. Institutions, on the other hand, have all the resources in the world. They hold a piece of information. However, if you're just starting out and you don't have those pieces of information, then do not become that idiot. Sorry to say, but that's just the bottom line. So in order to be well informed is simply learning how to trade, learning the pieces of information that if you want to be in this business, then make sure to be educated. So what are the benefits of trading as a business? Well, number one, you're your own boss. And notice that unemployment rate increase, unemployment claims increase from 285,000 to 6.6 million. So it proves to show once again that there is no such thing as a secure job. I know a lot of people who lost a lot of jobs out there and who are unemployed. On my part-time, I teach at the YMCA. So same thing. The YMCA closed and there's no income. So as an extra form of income. So that being said, if you don't have that, so just imagine if I didn't have trading as another form of income, then I'll be screwed, basically. So imagine the amount of people out there who are relying into their major jobs, and then all of a sudden you don't have a job. So that's what causes the unemployment rate to increase. So in trading, on the other hand, you are your own boss. All you need is a laptop and an internet. So it's low maintenance, low cost. Laptop these days doesn't cost that much. Internet doesn't cost that much either. So when I actually started, we didn't have a laptop in the 90s. Internet isn't just it's just the starting point where you have a 256 kilobyte. So when we were starting out, I was putting everything on paper, and a graphing paper just to look at the charts. So now you have basically everything. You can trade anywhere in the world with your laptop and the internet, where every country has an internet, and you have a laptop, you can trade anywhere in the world. So you don't even need to have an office. That's why now that everybody is currently working from home or staying at home, now is a really good time to learn how to trade and practice. And people who are trading, like say, for example, for myself, yes, I'm making an extra form of income through trading while you're trading at home. So now the fourth one is that the market never sleeps. It's an ongoing thing globally. You create your own income. So it's not limited to, there's no limitations. The only limitation is actually the 6 inches between your ears. So that's what creates the limitation of it. And at the same time, you have the freedom, the time and the money, that if you can just follow simple rules, you can follow your own values, your own principles, you can abide by them, you can have the discipline to do so, then there's no reason for you to be successful in regards to be consistency when it comes to trading. That gives you the freedom, and hence it's just I'm fortunate that I have this freedom to spend time with my kids. I have two kids. And at the same time, I also have the freedom to train as a personal trainer, also train elite athletes. And it's for me, trading and sport is very similar because it is a game. At the end of the day, it is a game. The only difference is no physical contact. So there's just that relationship basically between the two in regards to sports and trading. The disadvantage, on the other hand, as a business, is that it's easy to lose money as well from trading. That if you are going to do this by yourself, and if you choose to, then be prepared that you're going to lose money. Um, Learning from trading, and trading actually is a very expensive learning experience. That if you don't do it right, then it's easy to lose money. Then you lose more, and once you're addicted to it, oh man, it becomes very expensive. So if I were you, learn how to do it properly. Get educated. It takes time to be successful at trading or in any form of business. Likewise, in your own profession, how many years in order for you to be in that state where you're at this point in time? Perhaps you went to school, you got your college degree, and then from there, you got to get trained. And then from that moment on in time, you become masterful at what you're doing. So imagine me going to your sandbox. There's no way I would be able to. I need training. Trading is no different. You need training and you need to be educated by it. It takes money to be successful at trading. And hence, you're losing money. And at the same time, if you do it by yourself, once again, you only see 100 degrees that's in front of you. You don't see 100 degrees that's behind you. So if you're learning from your mistakes, it can also be very expensive. It takes passion and desire to be a consistent, profitable trader. What do I mean by that? Passion and desire simply means that if it's time to trade, then it's time to trade. When it's not time to trade, then it's not time to trade. Then it's time to get up at a certain time because that's the particular time that you have to trade. Then make sure to do so. It is very easy to be relaxed when when you are your own boss. It's easy to sleep in. It's easy not to follow your own rules. It's easy to not fire yourself. Not like being an employee, you got to be at a certain time, and if you don't show up at work, guess what? Your boss will know, and you'll get spoken to, and next thing you know, they're laying you off, right? So unfortunately, with trading, since you are your own boss, you have all the freedom basically in the world. So there are certain major concerns about learning to trade or learning about the financial markets. Here are the specific key questions that I basically got from traders basically in the past who wanted to learn. One of their major concerns is, why is it important for me to learn to manage my own investments? I believe I covered that. Two, which one is the right asset class for me as a beginner? I'm going to go through that in the next few topics. How can I learn that? Where can I learn it? Is it hard to learn it? To be honest with you, it is not. Hard is only going to be hard if you choose to be hard. But other than that, I believe what's hard is a piece of rock. Could it be challenged? Absolutely, because it will challenge you all the time. Do I have to learn all of them? Um, in my opinion, in due course, you will, which is imperative because it's really important to be adaptable to the marketplace. So you can mix and match things. Not only that, you'll be able to minimize your risk through different asset classes. Is it really easy to make money from trading? Yes, in due course, it becomes easier each time. The more practice you do, the better you become. That's a progression. What are the risks involved? The risks, simply I'll go through that with you. The risk is that you're not learning, that's a risk. The risk is that if you can have a calculated risk, then excellent. Other than that, the risk of not learning it, I believe, is a shame because it's just another form of another income that you'll be able to do. But just in case that you lose your job, then at least you have something set aside or another form of income. All right, myths and facts of trading. So what are they? Number one, trading is easy. Is it a fact or is it a myth? It is a fact that trading is easy. On the other hand, what it makes it really challenging is simply our emotions, dealing with our emotions, dealing with our 6 inches between our ears based on our own belief systems, especially the limiting ones. If you see fit that trading is hard, then it's gonna be hard. If you find it challenging, it's gonna be challenging. But at the end of the day, that if you have the confidence to do so and you have specific important values like discipline to be able to know when to stop, um, and you have the integrity to follow through that and not using your ego of righteousness or your ego of fear or ego of greed, then you will be successful at it. If I could share some of my experiences, then yes, that would be it. It is simply more of the emotional barriers on how you can control, especially the negative ones. Say, number two, it takes time to be successful at trading. Yes, it is. It goes hand in hand. It is relative to the time frame. So I love Brazilian Jiu-Jitsu and I love martial arts in general. Almost all since I was a child, martial arts, I've already been drawn to martial arts. Been doing Taekwondo for almost 37 years, Brazilian Jiu-Jitsu for 12 years. Um, Imagine if I learn Taekwondo and Jiu-Jitsu via YouTube or by a book. It won't happen. That if I'm going to compete against somebody who is a black belt, the odds are very minimal. To be a black belt, to get, I can't just give myself on basically a black belt. No, there's a progression, and hence is why it goes in levels in terms of belts. In my opinion, to be successful at something, there's no easy way out. You have to put the time and effort into it. Trading is not a get rich quick scheme, not like people think. If you see online, and you see marketing ads, you will make this, you make 100%, 200%, make 2,000, 3,000. There's just marketing. But in trading, it is really, there's no guarantees. The only guarantee that you can give yourself is that the amount of time and effort that you put into it. So even if I'm teaching you, and at the end of the day, it is still up to you to make it work. I'm just here to guide you. I'm just here to give you the piece of information. I'm here to give you the tools, but it's up to you to go out there and basically do it. It's like for me, martial arts. It's up to me to train. If I want to be better, then I need to train. Going to train 2 or 3 times a week is not good enough. I want to be the best of who I can be as a martial artist, then I need to train every day 2 to 3 times a day. If I want to compete at a world-class level, then I need to train. So likewise in trading, there's no easy way out, unfortunately, and it will take time to be successful at trading. Can you learn how to trade by yourself? I believe I covered that. You can, but it will take time. It'd be very, very expensive. Is it easy to make money from trading? It's the same pretty much. Trading is easy, and it's easy to make money from trading if you do it right. However, once again, there's going to be challenges in between, but if you can conquer those challenges, then definitely I can succeed on my own. You can, but once again, it will take time. But it's a fact that trading is a lonely profession. If you don't have anybody or you have a mentor or a coach, it could be very challenging. So that's the bottom line. Is trading gambling? I believe crossing the road is gambling. Everything is gambling. Why? Because there's no security, there's no certainty. You just never know. Tomorrow can hit by a bus. You're just crossing the road safely. Next thing you don't see it, bam, there goes a tree falling onto you. So is trading gambling? Yes, it is. However, it minimizes that. In order for you to be a professional gambler is by risk minimization. And how do you minimize risk? Is gaining through knowledge and experience. That's the bottom line. So, I mean, even a job, there's no such thing as a secure job. That job, as well, that you think this is a form of security, is also gambling. You will get it at one point in time, you will lose it. So all I need to make money is a good trading system. All trading systems are not created equal, and hence uh, it's not just about the trading system, but it's also about the mental condition that you also will have. Can I trade part-time? Absolutely. I've been trading actually part-time. I only trade about an hour a day. Sometimes I don't even trade. If there's no trade, there's no trade. It is simply a really good business. And then in my spare time is through teaching, spending time with my kids, and having fun, enjoying it and inspiring others that this could be done. I just use actually trading as a vehicle to inspire somebody in regards to be a better version of themselves. So some will do it via motivational speeches, some will do it via sports, and for me, I'll do both sports and trading as a vehicle. Trading takes planning and preparation. It's a fact. It's not a myth. Absolutely. Like anything else, if, say, for example, I want to compete in a world championships, then I need to plan and prepare myself, and I can't just go in there for the sake of going in. Because at the end of the day is what is our role and what is our purpose as a trader. The purpose is to make money, and the purpose is not to lose money either. Okay, so but if you have your planning and preparation and to minimize that, can we win all the time? Absolutely not. But if we, as long as we can minimize that risk, that's all that matters. All right, let's discuss about the trading game. As you can see fit here, there are only two players of the game. There is a buyer, there is a seller. The left-hand side here, what you see are your institutional traders. This is what happens on the trading floor. Notice you don't see charts. You only see people trading against other people. Here, on the other hand, you see here also different people, but they're looking at charts. They're looking at the system. So the question is, when you want to be part of the game, would you prefer to be part of this box or this box? Well, let's see. First, let's define what an institutional trader is. Well, an institutional trader manages relatively large amounts of capital. Compared to most traders, institutional traders will typically have larger positions and hold them for longer periods of time. When they trade, they often trade large numbers of shares or basically at once. It's often said that institutional traders are the ones who really move the markets. They create the large sustained price changes. Most of the noise in the markets comes from day traders trying to see what the institutions are doing and acting accordingly. The remaining investors do not make a serious impact on the market. A retail trader, on the other hand, is simply our individual investors who buy and sell securities for their personal account and not for another company or organization. So based on these definitions in terms of institutions versus retailers, then you can see here that the people on the left are your institutional traders. The people on the right are your retailers. To be an institutional trader, it's either you are trading for a big financial firm or a big company or your own, you have a lot of money, you are the trading floor, then yes. But if you're going to be a small fish and you want to be in this game, then whether we like it or not, we'll be considered as retailers. So my analogy, based on my experience, is this. If you want to be a consistent profitable trader, we have the highest probability of winning, it is imperative not to be part of this group. You need to be part of this group, people on the left, not on the right. But the question is, if you're a beginner, then hey, then how would we do that? Because now that with algorithm based, and I can't really get into an institutional type of trading. I need to study and so forth. But I don't want to do that. I just want to learn how to trade as a retailer. So based on my experience, there is another side of the equation where I call it an observer. An observer is a type of retail trader who observes the movement of institutions to look for clues that institutions leave behind, to trade and be with institutions. So when I started out in trading, I was here. I was in a seminar following the same system like everybody does. and then buying at retail price for it. Then, and it dawned to me, it didn't make any sense. Why am I buying at retail price where the risk is now huge? And they're telling me that I can gain that small amount of profit. Now, if the probability is not even that big, then the probability actually of losing is more likely than to win. So I said, how can I be part of this group where I can't be inside the trading floor? So when I moved to the US after I got married and moved to the US in 2007, I really wanted to know in terms of how the trading game basically operated and the way how it operates. So I was fortunate enough to meet professional traders, and then I went into the trading floor, the Chicago Board of Options Exchange, and CME, and I really wanted to know the mechanics behind a chart, the mechanics of how I could be able to get in at the cheapest price point. So this is a photo that I took a few years ago. Here, this is a CBOE. It's still basically up and running. This is the volatility index pit. So the VIX is simply the volatility index of the S&P 500 that determines simply as a fear indicator. On the opposite side, just imagine if you walk towards your right, that's the S&P 500 pit. So here, people on the bottom, that's your market maker. The market maker, the one who creates the price. You have the bid and the ask, the buyer and the seller. And then the people around it, if it's good, depending on the report, sometimes they will wait for the report. If the report is great, then they will buy. And you will know whether if it's a big buyer. If the big buyer buys, then everybody basically follows. And then the rest will continue from there through retailers that people look at charts. So that's the mechanics behind a chart that determines the valuation of the price that will go up and down based on supply and demand. So when I got that, and the analogy that I could basically give you is this. When you see, just imagine a whale. When a whale is hungry, what will it do? Well, what it does is simply it will find a pool of sardines and it will circle that pool of sardines. And then with the current, all the whale was going to do is basically open its mouth, and next thing you know, all the sardines are being eaten without even them knowing that they're being eaten. That's what's happening in the financial markets. That when retailers are trading based on their own perception, based on their own opinion, well, there's not enough evidence and they're only using a system that is actually lagging, then they're at disadvantage. So that being said, institutions, when they're buying, they will find a way to manipulate it where people are selling. So if they're selling, then they have to buy. If they're selling, then they have to buy. So there's a winner, there's a loser. It's a zero-sum game. So for me, on the other hand, what I have established is that, hey, if I will be an observer, that little fish, you know, those whales and there's the fish next to it, that's me. That's what I want to be. That if they go up, I go up with them. If they go down, I go down with it. If it goes sideways, then I go sideways with it. So being an observer gives me that ability to find the biggest odds and knowing what institutions are doing because they will leave clues in a chart. And hence, my tip is that if you're going to do this on your own, which I would recommend not to, is do not become a retail trader. You will lose 90% of the time. Be an observer and always know the players of the game. So by being that, you'll have a better odds of winning. Okay, so that is my recommendation based on my experience. So how do you get started with trading? Well, based on what we're discussing so far in terms of the financial markets, you have 4 different types right there, from stocks, forex, futures, and options. In the US, since I'm just going to deal here in the US, if you want to trade more than 3 times a week, you need a minimum of $25,000 in terms of your capital as a starting capital, just to as a required minimum to cover the margin requirements. And the stock market is open from 9:30 a.m. Eastern Standard Time to close it at 4 p.m. Eastern Standard Time. Since it closes and it opens again the next day, they will create a gap. And at the same time, there are more than 24,861 stocks. So what do I mean by gapping? Okay, so let me demonstrate to you what gapping is. And I will take here Apple shares. So here's the chart of Apple. Notice, see those empty spaces? That's what we call gapping. If you look through here, you see the open, high, low, close. If I'm gonna put my cursor to this bar right here, notice that it opened, which is right there, opened at $318.62. It created a high of the day at $320.45, and there is a low at $310.50, and it closed at $313.05. So when the market closes, the stock market closes at 4 p.m. and then the next day it opens at 9:30. Check this one out. The opening price here is $297.26. So closing at 313, opens at 297, 07, 8, 9, 10, 11, 12, 13, $16. So if you, for argument's sake, bought one share of Apple at $313 and you put, say, your stop loss at $310 because you're only willing to risk $10. Sorry, $3. The next day, unfortunately, you're not going to get stopped out at 310. You're going to get stopped out at 297. So you've lost not just $3, but you've lost $16 basically from there. That's huge, right? So that being said, as well, I don't like gappings. If you sold it, then definitely you would have gained 16 bucks overnight, just like that, and it's awesome. But if you're against it, then basically you're screwed. Plus, there's more than 24,000 different stocks in the stock market. Unless you have a powerful system that would create and find what to trade for, then fantastic. This one is about Forex. In the Forex market, you only need a minimum of 50 bucks to trade anytime. They're open 24 hours a day, 5 days a week. There are no gaps. There's minimal to no gaps. There are 40 to 70 currency pairs, and there's 6 major pairs that you can focus on. Let me share here with you about gapping with currencies. See how it's smooth. The only time it will gap is when there's a report during the weekend. So that's the only time it's gonna gap. Other than that, during a trading week, notice how it's pretty smooth. And you can minimize your risk at any time within that 24-hour period, which is awesome. So that being said, let's discuss the next one about the futures market. Well, you need a minimum at least $10,000 to trade to cover as well margin requirements. They're open 24 hours a day, 5 days a week. They have also gaps, and you can trade commodities, different commodities from gold, oil, copper, indices, the EN, the ES, the YMs, currencies. So there are also quite a few that you can focus on. And last one is their options. At least you need $5,000 in order to trade the options world. There are more than 200 different strategies, depending on what you're using, utilizing as a strategy. They're open as well from 9:30 to 4 p.m. There are no gappings because it's a directional type of trading. And then the options world, you can do options in stocks, ETFs, foreign exchange, indices, commodities. Okay, so for a beginner, which one would I recommend? I would recommend the Forex market because of its benefits. One, when you're learning from mistakes, it could be very cheap. So I always tell students that when you're becoming a student, I'm not going to tell you to open more than 500 bucks maximum. And the reason being is your job is to maintain consistency. So if you lose that $500, then that's it. Then the question is why? Why did you lose that whole $500? If the goal is to be consistent, then you shouldn't lose that $500. Number two, minimum capital required. Like I said, $500 is more than good enough as a starting point. If you live outside of the US, then no more than $200, because you can as well use a micro account where it's leveraged 500 to 1. So even a $50 actually is more than good enough too. Can you maintain that? And then from there is the consistency. For me, it's like sports. You cannot compete on Olympic level if you haven't won in the club level. So if you won in the club level and then you're getting better, then you compete at the state level. You compete, you win, then you represent your state, you go to the national level. You compete, you win, then you can now representing your country to go to a world-class level, like say the Olympics or World Championships, Asian Championships or whatnot. So that's for me is like trading. First, start small, compete at a club level, you're showing consistent, you're winning, then go to a state level, add more money into that account, and then from there, maintaining consistency, then you can now compete at a national level and then a world-class level where if you have 50K, 100K, then excellent. Because the process, in my opinion, is the most important part, where if you can show consistency based on the process that you're learning, then you will be able to do that and replicate it in any type in regards to the capital that's required. Of course, the bigger capital you have, then if you maintain the consistency, then the profit as well is bigger, right? So all depends as well on your mindset in regards to your relationship when it comes to money. Forex is 24 hours, 5 days a week. So in regards to risk, you can minimize that risk. You can close that positions that you're not feeling great intuitively, and your gut feeling says to get out, then you can get out. When that's like say stocks, for example, you're stuck. And hence where people who leave their trades and an event happens and next thing you know, futures price drop and you can't feel it. It doesn't feel good, right? So that is one thing in regards to a disadvantage of trading stocks at the very beginning. You can manage your risk 24 hours. You have the ability to trade in any time zone, meaning that if you are, say for, I'll just say it as an example. I want to trade the Asian market, then I'll trade basically in the afternoon. If I am a morning person, then I'll trade the US market. If I am a night owl, then I will trade the European market. Now, if you live overseas, depending on your time zone, you can trade whatever time zone you want. Now, the disadvantage though, if you're trading stocks, say for example, I live in the West Coast, East Coast 3 hours behind, 3 hours in advance. Then at the very beginning, if I'm not a morning person, then it's going to be a challenge for me to get up at 5 in the morning or even 6 in the morning to open at 6:30, right? So unless if I move to the East Coast. Now, what if you live in Asia? What if you live in Europe and you want to trade um, the American session? Then you got to get up based on that time zone. Trading currencies, on the other hand, you don't have to do that. Last but not least is about volatility. To be a day trader or you want to trade shorter time frames, you need volatility. You want to make money quickly, you need volatility. In regards to liquidity and volatility, the currency markets are simply the best because it's 5.5 to 5.66 trillion dollars that money is being exchanged on a daily basis. New York Stock Exchange only is approximately around 25 to 30 billion dollars in one day. And hence is why a company would be able to manipulate a stock. A billionaire would be able to manipulate a stock. Currencies, on the other hand, it is challenging to manipulate. You need to be a bank. In actual fact, there was an incident a few years ago where the four major biggest banks in the world made had a secret meeting in order to manipulate the currency markets. So they got caught, had to pay a fine, and that's the thing. It cannot be you, cannot be me. There's no way that we'll be able to manipulate it. Even if you're a millionaire or a billionaire, it's pretty tough to manipulate it. All right, so that is what in terms of my recommendation. So what you will also need is a provider to start off with. I recommend Wanda and I recommend Forex.com. So based in the US, these are the top two providers that I would recommend. A provider is someone or a company that would be able to set you up for your trading account. You will deposit your money in there. They will then you set you up, and you'll have a platform that you can buy and sell, and you'll be able to, once you are going to be part of a member, you want to learn from us, then we're going to go through the platform, how to use a platform. It's like driving a car. In other words, you have a vehicle, and this is your dashboard. So I mean, using it for beginner, your vehicle is Forex, your dashboard are these two, either utilizing Forex or Owanda. So Wanda is based in Canada. They have, they're also really good. They have good liquidity. Likewise for Forex.com. If you're outside of the US, then you have Swiss Bank, you have Citigroup. So there are quite a few that can offer different types. So just be careful as well if you're doing 500 to 1 leverage, and it depends as well you're dealing with it. But other than that, yes, outside of the US, there's quite a few in terms of currency providers. And then you also need to be an analyst, a technical analyst and a macro fundamental analyst to logically find entry and exit points. So technical analysis is what I have introduced to you here. See, this is a chart. It's what we call candlestick chart. You will learn this more on the next phase, where to from here, learning basic technical analysis and learning macro fundamental analysis. Macro fundamentals is the relationship of the whole global economy, looking at, say, the S&P 500 with the VIX, with the Dow Jones, with the dollar index, which is connected with oil, with gold, with bonds, and to see if there's any form of anomalies basically from there. And if there's any form of anomalies, then it's awesome, because they are leading indicators compared to lagging indicators like, say, symbols, moving averages, MACDs, Bollinger Bands, and so forth. So these are also the things they're also going to be learning in regards to the fundamental analysis. At the same time, you also need to be your own psychologist to manage your own emotions, because there are three different phases in trading. You have before trading, where you will need your logical side, and then you have during trading, where you will need your intuitive side, where now it's based on your emotions of fear or greed, and you will micromanage the account. Can you be a person of who is responsible, who is disciplined, that would be able, that if it's time to get out, it's time to get out even before your stop loss will hit, because you just know that it's going to drop, things like that. You're going to be your own risk manager to manage your own risk, and your own money manager in order to manage your own money. So these are the four hats that is imperative that you will need as a trader. So where to from here? Well, we offer a free beginner course. It is an online course that you can learn at any time. And then from there is to attend our support class that we offer for 30 days for free. It is an everyday class from Monday to Friday, and I will show it to you from here. So Monday to Friday, in terms of a support class and also live training, because it's also imperative to see the theory basically in real time. You're gonna practice, or a lot of practice gotta be involved. You will put in trades in your demo account at the very beginning before we go live, so you can see the theory that you're learning at the beginner course in real time. You'll see also differences in terms of progression of your learning. And then basically from there, it's very simple. It's just to register. And to register is very easy. All you have to do is to email me at esttraders.com to get started. And the reason why it is important for you to email me, because I will add you in to the system, and then you get into our website, And when you click on member login, once you get in, you will receive your username and password in order for you to access the free course, the beginner course. Okay, and at the same time, the access to log into the support classes. So they're free of charge for you during this, basically, as good as my heart. And in my opinion, I believe it's important, and take advantage of it. So the risk is zero. The risk is actually for you, by you not taking it or learning it. If something's offering is basically for free, take it as an advantage. And then basically from there, if this is for you, then you can continue from there. But if not, then so be it. At least you gave it a shot. All right. So that is it basically from me, guys. Thank you so much for listening. And once again, if you have any questions, please feel free to email me at estrators@gmail.com. And thank you for listening. Take care. Until next time, please be safe out there and stay healthy. Bye now. Take care. See you later, guys.